Hey, what's up, realtors? Happy Friday. Let's jump into your weekly mortgage and real estate market update. We're going to cover mortgage rates and what's driving them. We're going to cover the Denver real estate market, go through some stats there, major economic reports and Federal Reserve updates, and then I'll wrap up with some upcoming events that will help you grow your business. All right, let's dive in. First up, mortgage rates. Mortgage rates have been extremely volatile recently. Over the last week, rates move higher again, with the average 30-year fixed mortgage back into the mid-6 range. Now, if we go back 3 months, remember February, we briefly dipped into the high 5s for a moment. That was the best rate environment we've seen in quite a while. But since then, rates moved back up significantly. What's driving that? 3 main things. Number 1, inflation concerns. Mortgage rates do not directly follow the Federal Reserve. They follow the bond market, especially mortgage-backed securities in the 10-year Treasury. When investors believe inflation could rise, bond yields rise, and mortgage rates typically move up from there. Number 2, oil prices and geopolitical instability. The conflict involving Iran and instability in the Middle East push oil prices substantially higher. Higher oil prices can create higher inflation, and higher inflation means higher rates. And number 3, economic resilience. The labor market is still relatively strong. Consumer spending is strong, and because of that, the Fed has not been in a hurry to cut rates. The Fed recently held rates steady, and markets are now expecting higher for longer compared to what many people expected earlier this year. Right now, the Fed continues to take a cautious stance. They do not want to cut rates with risking increased inflation, so again, expect volatility. So what's the outlook for the rest of the year? I'll take a look at my crystal ball over here. Personally, I think the volatility continues. We're not looking at a huge drop in rates. Over long term, I think they will go down, but expect continued volatility week to week. For realtors and buyers watching rates closely, next week we have a few reports coming out. Tuesday CPI inflation report, which is probably the single biggest driver of rates right now. If inflation comes in hotter than expected, mortgage go up. Inflation lower than expected, mortgage go down. We'll also get producer price index, retail sales, jobless claims, and manufacturing reports throughout the week, all of which give markets clues about inflation and the strength of the economy. On top of that, investors will continue watching oil prices and the conflict in Iran. Higher energy costs can increase inflation pressure. And again, just to beat a dead horse, higher inflation means higher rates. So expect continued volatility and daily movement. Now let's talk the real estate market. Using the latest data from DMAR, and honestly, the best word to describe it is balanced. Not crashing, not booming, we're stabilizing. In April 2026, the median close price across the Denver metro area came in at $605,000. That's basically the same as 2025 at $604,000. So pretty flat. Despite all the headlines and higher interest rates, home values overall have held surprisingly steady. Now, inventory is where we're seeing the biggest change. Active listings jumped to 11,500 in April. That's up 17% from March, and more sellers entered the market. That's important because buyers finally have more choices again. Now we're seeing more inventory, more price reductions, longer days on market, and more seller concessions. So these are good things for buyers. Closed transactions also improved in April, increasing about 2% month over month as the spring market picked up. Days on market have definitely stretched compared to last year. The Denver metro area was 13 days in April 2026. That's an improvement of 19 days from March, meaning things got more competitive. However, they're selling a little bit longer compared to April last year, where they were at 11 days. For buyers, this may actually be one of the best markets we've seen in years because you have leverage, you have inventory, which means you have more time to think about making an offer and you can structure smarter deals. We're seeing more opportunities for seller paid buy down, so getting that interest rate lower. Closing cost credit, seller pays the closing costs. Contingent offers getting accepted. Inspections and negotiations. Now for sellers, the market is still good, but strategy matters more than ever. If a home is priced correctly, marketed well, updated, and shows well, it's still selling. But overpriced homes, especially condos, attached properties, and luxury, those are sitting significantly longer, and that's especially true in the attached market. DMAR noted that some attached luxury properties have seen median days on market climb dramatically compared to last year, with elevated inventory creating more buyer leverage in that segment. So the list it and they will come strategy is mostly over. The agents and sellers winning right now are the ones who understand pricing strategy, marketing, and negotiation. My overall outlook for the Denver market is moderate appreciation, continued inventory growth, more normalized negotiation, and a healthier overall market than we've seen in years. I do not expect a major crash in Denver. Colorado still has strong long-term fundamentals. We have population growth. We have strong household income, limited buildable land in many areas, and continued demand for lifestyle and relocation. So overall, I think we're moving from an emotional market to a more educated market. And honestly, I think that favors experienced realtors and educated buyers. Now let's jump into some upcoming events. Friday, May 5th, 9 a.m. at my office, we have Jared Larkin coming. He's the master of tech and marketing. He's going to be covering AI, social media, and hosting events and how to use all of those tools to generate more business. And yes, it also comes with 1 CE credit. Then our next Real Estate Playbook Mastermind is Wednesday, May 27th, 9 a.m. at my office. As always, the mastermind focuses on selling more homes, getting better systems, better marketing, time management, accountability, life balance, and we work together as a group to share wins, success stories, and tactics. Check out my Eventbrite page for more upcoming events. At the end of the day, my goal with these events is simple: help you grow your business and improve your life. Before I wrap up, I do have one favor to ask. When you get a tough client, a tough deal, another lender says no, please think of me. Last month alone, we prevented 3 families from losing their homes after another lender declined their loan even after they were already pre-approved and under contract. One was a condo issue, the other 2 were income issues, but luckily we were able to step in and save the day, and all 3 families were able to close on their new homes. That's one of the reasons I love to say I love tough deals, which brings me to the loan program of the week, our non-warrantable condo and condotel loan program. A non-warrantable condo is basically a condo that does not meet Fannie Mae, Freddie Mac guidelines. That could include high investor concentration. It could include ongoing litigation, insufficient reserves, too many short-term rentals. There's a lot of things that could blow up a condo. So if you have a unique condo situation, I want you to think of me. Most lenders either can't do these loans or don't know how. But we have a portfolio and specialty loan program designed specifically for these properties. We are condo masters. This can be huge in Colorado mountain communities and resort areas where short-term rentals and condotels are common. So if you have a buyer being told the condo doesn't work, have them call us before they lose the deal. And lastly, as always, we are here this weekend for all of your buyer needs. If you need pre-approvals, payment scenarios, strategy calls, listing agent conversations, we'll call that listing agent, or a weekend rescue save my deal. Call our team line 303-209-7812 and one of us will get you taken care of. If you found this information helpful, please follow me, like me, comment, or share. Have an amazing weekend, everybody, and we'll see you next week.